Hey traders, welcome to the 22nd podcast for the Performante podcast. The bullish BTC coverage continues. So in this podcast, we'll be going over some institutions and some countries that are actually using BTC to transact. We'll go over a little bit into the efficiencies of transacting in cryptocurrencies in short. We'll go over one bank that is actually issuing Euro stablecoin on the Stellar network. We'll get into that in a little bit. And then we'll end it off with a little bit of a safety precaution after someone loses over 50K in life savings to a ledger phishing scam. So I'll pass it now over to Nathan.
Hey everyone, thanks for tuning in to another one of these daily December episodes. If you are liking it or have a suggestion for topics, let us know. We'd love to keep it relevant for everyone listening. So the first story we will be diving into right now, JP Morgan says gold will suffer for years because of Bitcoin. To quote them, the rise of cryptocurrencies in mainstream finance is coming at the expense of gold. I think it's an observable trend that we've seen kind of an outflow of the value of gold. It's hard to speculate if it's caused an inflow into Bitcoin, but the price action of gold has been not necessarily bearish, but definitely in somewhat of a downward consolidation trend. Same with silver. They haven't really seen that massive push to the upside that I think people who recognize them as stores of value would typically associate with the falling of the XY or the US dollar. And instead, we're seeing this massive push to the upside with Bitcoin. And it's their belief that because of the 7 billion outflow of gold ETFs, there has been a $2 billion inflow into the Grayscale Bitcoin Trust, which is a stark difference in terms of how the value and liquidity is moving around between these two assets.
Very cool. The next thing we're going to be talking about is Venezuela paying for imports from Iran and Turkey with BTC to evade sanctions. So pretty unbelievable news in my personal opinion. A lot of these countries that are third world that may not have the ability to use the world reserve currency are finding other solutions to import, export, and transact goods and services throughout the world. And I think this is really going to be a major milestone for BTC because if you're not going to be using the US dollar, there are other currencies that you could use. You could use the yen, the Swiss franc, the euro. There are other currencies that are not the world reserve currency that companies and countries could use, but at the end of the day, they're using BTC. And in my opinion, that's an extremely positive outlook for the overall cryptocurrency market because if the second tier down of US dollar is going to be Bitcoin, think of how monumental that is going to be for the overall potential for the entire space. Got any thoughts on that, Nathan?
Oh, just to tack on to like how the dynamics of this Venezuela situation is looking. One of the reasons they're capitalizing on using Bitcoin for international payments is because the Venezuelan army is actively mining cryptocurrency at its recently inaugurated crypto mining center. And this is funding the Central Bank of Venezuela, allowing them to participate in international commerce, kind of get around anti-blockade laws. It's kind of interesting to see application at really that national level of trade and how all the, not necessarily the pieces are coming together for Venezuela, but overall this is likely having a positive influence in terms of how that country can conduct business and transact with the rest of the world.
Totally. Yeah. Pretty unbelievable. And just one thing to note, if countries like Venezuela and Turkey already have devaluing currencies, which Venezuela is obviously up there with the highest inflation rates that kind of any country has ever seen. So if they're already suffering from massive currency proliferation, and if the country's already set up in a, I guess you could say, blockchain friendly manner, which people can conduct commerce in a very efficient way just through cryptocurrencies, that's an extremely easy on-ramp. That is literally the next step that these countries are going to be taking if their currency explodes or just, vanishes into oblivion because there's so much currency, it doesn't hold value. So we can already see, in my opinion, kind of the breadcrumbs of where this is going to be going. So, yeah, in short, pretty bullish news, I would say. And to go on to the more institutional kind of overarching adoption of BTC, to get a little bit deeper into the World Bank, one of the world's oldest banks in Germany is issuing euro stablecoins on the Stellar network. Pretty unbelievable news. Let's dive a little bit deeper into it. In short, euro stablecoin is being issued by one of the oldest banks in Germany by I'm going to butcher this so bad, Bankhaus von der Heidet, BVDH, which was established in 1754. And they're now tokenizing digital assets and really trying to adopt blockchain, which is pretty unbelievable.
Yeah, it's interesting to see this kind of institutional adoption from the financial or from the commercial banking perspective. And just to quote what the bank had to say, the stablecoin is a very sensitive product and it requires a lot of trust from the users at the end of the day. And I think that they're entering the space because banks don't really feel comfortable using stablecoins like Tether or USDC, because of the risk that's involved with the other party. They're calling it counterparty risk, which is an interesting perspective because I guess they're just thinking that they can one up and provide a better service that is perceived in a more legitimate light. Love to see it. Interesting application of blockchain. And just to shift the perspective onto the consumer side, this is how much Bitcoin you would need to be in the top 1% to be in the upper echelon of Bitcoin owners. All you have to have is 0.28 Bitcoin, and that will superimpose you within the upper ranks of worldwide Bitcoin holders.
Yeah, that's not much in order for you to get into the top 1%. Obviously, as the number of BTC accumulates, as long as your dollar cost averaging and stuff is totally fine, because 1% now will not be 1% when all 21 million are mined. But in terms of where you need to be to position yourself for a possible extremely lucrative opportunity is to really not hold as much BTC as I think one may need. A lot of people think, oh, I can't afford Bitcoin, I only can buy one. Well, extremely simple explanation. You can buy as many as you want. You can buy $1 worth of BTC. So I think that this is an extremely tangible, doable sort of investment, 0.28 BTC. And I think if people, even if they're not interested in trading, are able to dollar cost average to hedge their position against their native currency they're using, it's an extremely attainable investment to reach that 0.28 to potentially put yourself in the 1% club.
Yeah, it's interesting. As of right now, that's like $5,200 approximately, which one lump sum, that's a decent purchase for the average retail investor. But again, that DCA approach is likely the most effective way to enter the market, assuming you are adapting that long-term perspective that is really favored with these long market cycles that we've been seeing. And so flipping the vibe back to an institutional customer that deposited 100,000 Ethereum into Kraken's new staking service. This is valued well over $60 million, and it was submitted within the 4 days of it launching. It's interesting to note that approximately 8% of the current ETH pool is staked on Kraken, which is incredible. I'd be interested to see the proportion that Binance contributes, because I do think they have a larger customer base. It's interesting to see that, I mean, you can host these nodes yourself, but ultimately, I think that people might just feel more comfortable going through these intermediary companies like Kraken, Binance, etc., etc.
Definitely. Just one thing to quickly note, I don't want to dive too deep into it, but the more people are staking, the less the liquidity pool is within these exchanges. Because if you're staking ETH, you're not able to purchase another cryptocurrency. You got to stake it. You got to hold them, right? So I think when more people are looking to stake, there's going to be less of a liquidity pool, which will shorten what you call the float. Like in a share structure, you call the number of shares outstanding a float. And if the float is reduced, that would increase the volatility because there's less shares to go around. And if you increase the float, increase the number of shares in circulation, there's going to be on average less volatility because there's more shares circulating around. So I think as there's more staking as well as the DeFi projects where there's locked contracts and with smart contracts, I think there's going to be a reduction in the float of ETH, which will obviously create more volatility, more demand because there's less of them to actually purchase. So definitely something to note and just something to think about and ponder.
Yeah, that adds a interesting dynamic to kind of that DeFi market because as these liquidity farms grow, it's going to inherently add an upward force to the pressure or upward pressure on the price because you're constricting the supply, which I don't think that's a lot of things that a lot of not necessarily retail investors consider, but that's definitely something to keep in mind as the Ethereum staking network grows.
Mm-hmm,
10K 2021, baby.
Oh yeah, for sure. And I'm just gonna add one thing here. While we're talking about the kind of staking, I don't think really many people understand that if there are individuals and players and traders and investors who are able to make money just from holding an asset, when the inevitable bear market does come, if you're able to get paid by holding an asset and you know that over time it's going to go up, there's going to be less sell pressure. And this is a thesis. This isn't exactly like we've never seen a transition this significant from proof of work to proof of stake on such a large platform and project like Ethereum. But just looking and kind of talking about it a little bit more in depth, if we are going to see more people hold Ethereum because you need to hold a certain amount in order to stake, that means they're not going to be selling it. And if there's a reduction in the sell pressure, then inherently I think Ethereum will be able to hold its value a little better than maybe it would have been with a proof of work system. So I think the proof of stake is definitely helpful in the, I guess, eco-friendly, environmental, less energy consumption. But I think from an actual investing standpoint where you're looking at the buyers and sellers and the supply and demand, it's actually going to reduce the amount of supply in circulation, which is inherently an extremely positive thing for the people who are long or the bulls within the Ethereum market.
Love to hear it. Just another bullish aspect to that transition that Vitalik and the rest of the Ethereum squad managed to pull off. And so just to wrap up this episode, we got another scamming news story to spread and another safety tip. So unfortunately, one Bitcoiner lost his life savings of $50,000 to the nefarious ledger phishing scams that have been happening. I don't know if you've gotten any, but I've gotten a text message being like, recover your Ledger account, as well as one email, but the email got default filtered by Gmail. Bless up, didn't fall for it, but ultimately, that's one thing that you really should be mindful of is that if they reach out to you at all, it's not them. They've already completed their business, you have a wallet that functions. Never give anyone your private keys. Never give anyone your secret seed phrases. Keep that information private. Stay safe out there because there's so many scammers out there. It is unbelievable that the volume that we encounter in terms of talking to people that have been scammed themselves, seeing those stupid idiots in our Instagram and TikTok comments. Scam emails. Like, it's crazy how many people just want to accumulate Bitcoin through illegitimate means.
Yeah, I think it's pretty easily understandable to, I guess, have some sort of filter, but at the end of the day, they get pretty deceiving, pretty difficult to compare and contrast if that is a scam or is not. So stay safe out there. Definitely is a really good way to end off this overall podcast. I actually have received a few emails, and same thing, Gmail did filter them out. One thing I do notice on our YouTube especially is we get more comments from scammers saying, this trader made me 8,000% every single week. and I get perfect withdrawals. Check him out. He's absolutely awesome. And it's something along the lines of that. This trader, this investor is making me lots of money. Send him 1 Bitcoin. He'll send you 5 back in a week, or whatever the scammer is looking to get out of it. We do see a lot of comments on our YouTube channel as well as our other social media platforms. So please, please be careful. And like we always say, join our Discord to get help if you do need it. It never hurts to ask.
Yeah, honestly, we love to provide that second opinion. There's loads of people that are talking crypto, talking investing opportunities, just kind of discussing the ebbs and flow of the crypto and the equities market. We've got a great community. Check it out if you haven't joined. And thanks for tuning in to our 22nd episode. We hope that you're enjoying this Christmas, the Christmas spirit, doing the episodes every day. And I'll pass it off to Keith to wrap up the episode.
All right, so thank you very much for listening to our 22nd episode. Bullish BTC coverage continues, and I think we will see this momentum just push through all the way through December. I don't really see a whole lot of shift happening, to be completely honest. BTC is holding really well above the $17,000 mark, creating that nice higher low. So we'll make another YouTube video this week for the technicals, looking at the price action for a lot of our assets that we do like to keep an eye on. So stay tuned for that. Until next time, have a good one, traders.